All right. What is up, everybody? Spencer Israel, Stock Market TV, and I'm joined by the man, the myth, the shopper, the legend, Jeff Macke. Mr. Macke, how we doing?
Spencer, I'm doing pretty well. Not as well as you, man. I want a little of whatever they served you up in Canada because you seem peppy, you seem full of life, you seem
Uh,
respectful. It's nice.
Canada was great. Toronto this time of year is lovely. Those of us who don't get Southern California weather all year round have to appreciate it when we get really, really good weather. And right now they had really, really good weather. Food was great. So I am feeling refreshed, and I'm glad to be back on this side of the border. So I've admittedly been a little bit out of things the last couple of days. Why don't you kind of fill me in?
Got to bring
I
you up to speed.
Yeah,
Sure,
bring me up
sure.
to speed. I know we had retail sales. I admittedly didn't see what they were. Uh, I don't know. It's not about how the number came in though. Just interpret the number for me.
Yeah, I mean, it was pretty good actually.
Okay.
The other shoe didn't drop. All the doomsday sayers, the nabobs of negativity out there who keep telling you that Christmas is going to suck and maybe be
Yep.
canceled this year. Hey, nope. Yet another month where sales were pretty strong and everyone wants to kind of be negative about it. We heard from Walmart. That's why we listen to all the earnings reports, man. So that's why I toil awake. So you can go to Canada and you can know while you're up there that retail sales are going to come in just fine, which is what they did. Which is why we saw a little bit of a bump there. Now you can say that it's going to be tariff inflation, it's going to be whatever, but for the most part, unless you get paid kind of to do this, which I do a little bit, but even I don't really pour through this too much. It can be revised heavily. You're seeing a consumer that will get into kind of sit down restaurants. They're moving away from that a little to grocery. They're kind of tweaking things along the margins, but for the most part, sales came in strong, which, we're running out of months to have a recession this year. So we've been kind of waiting for the downturn ever since tariffs were announced. And we're running out of time because if August is strong, that means back to school is pretty good, which, September should be strong. And if people are going to cash out and not buy presents, they better stop spending relatively soon.
I think you summed it up right there. We're running out of time for a recession this year, right? So it's already almost Q4, if you can believe it, right? So
Right? Yeah. Holiday season is here, man. It's people are buying back to school. It's been Halloween in Home Depot since August 3rd.
I think people, I have a hunch, Jeff, that people are going to be paying more and more attention to the retail sales number in the coming months because we've already seen weakness in or downward revisions in the jobs number. The job market seems shaky. We know that inflation is ticking up. But the consumer, the retail sales number, is coming in okay, right? And as long as
Yeah,
people keep spending money,
then we're going to be kind of fine. I mean, it's you might not like it. I'm not crazy about the path we took to get here, but
yeah,
the market has held up relatively well. We've priced in some margin concerns. This is why companies really need to report every 3 months, by the way, which is a slight divergence off our topic. But if we were just going to go by government data, we would have been sort of waiting for this, and you overlook at these numbers, and you could paint a picture kind of whatever you want based on these little fragments of information that we get from the government. But the best stores continues to be the Walmarts of the world, the Amazons of the world, Costco.
yep.
How bad can things be if Costco's just printing 8% every single damn month for their same store sales? They're the only ones that report that number still. It's pretty useful to know, though, because it's a huge company. It's the third largest retailer in the country. If they're doing okay, there's a pretty good chance that everyone else is doing at least okay. You can always find people that are falling behind, but
Yeah,
you got to search for them a little bit.
that's true. All right, so we'd be remiss, Jeff, not to mention that the Federal Open Markets Committee, aka Jerome Powell and the Funky Bunch, are meeting today. Well, they've been meeting since yesterday, and today they're going to come out and they're going to raise interest rates. Uh,
They're not going to raise them.
I'm sorry.
That
I'm
would be
sorry.
a shock. See,
Whoa,
now
whoa,
that would be a
whoa,
surprise.
whoa.
We should
Time
come
out.
back live in like 50
Hey,
minutes if he does.
whoa. I told you I've been out of it for a couple of days. They're going to lower interest
There
rates
you go. There you go.
today, which the market is fully pricing in. It's not about the interest rate decision per se. It's about, as you always, what he says after the fact in the press conference. What are the ramifications of this, if any?
I mean, he's going to clear his throat 5,000 times. There'll be a 200-point swing in the market that will immediately attribute to people being over concerned, over enthusiastic. It's a bunch of noise. Honestly, even if you trade a little too much, the way I do, the way a lot of folks do, this is not one to trade. Hasn't been for 30 years. It's two things about the Fed. The first move is usually bogus, but it's so damn noisy that you're better off not trading the reaction on this, because what edge do you possibly have? Unless you're, Citadel and actually throwing the cash and kind of creating your own momentum. But the other thing is, it's just stay out of the way. Right now, we've got the Fed cutting with a lot of things kind of as good as they can get. Walmart's making its first high in forever. It's Amazon's looking like it wants to break out. The retail, the consumer, as we measure it now, as much as we complain about all the ETFs and everything, the consumer index I have is still at all-time highs. It's just kind of breaking out and looking relatively good. And we're cutting rates into that. That should be bullish. And so if you see down 500 today, buy the freaking dip.
Yeah. All right. Let's move on to.
Oh, that final point on the Fed, though. You mentioned that the market's pricing in. Look at those stocks. I put up the home builders there.
Okay.
This is low in Home Depot. We talked about them when they reported. They were really early in the reporting cycle in August, and they were both fine. And the stocks reacted really incredibly well. These two companies are up 20%, give or take, each in the last 3 months. These are not stocks that are big momentum plays. This is not Home Depot and Lowe's aren't where you go when you're looking to gun your get the volatility cranked up in your portfolio. So these moves reflect, a lot of pricing in going on, a lot of expectations that this is going to trickle into the housing market. But the strength in this group is undeniable. We pinned it when it happened, and it continues kind of looking pretty good still.
So the consumer is strong, and they're going to lower interest rates, thereby incentivizing more people to spend money. So
right into the teeth of all the tariffs coming through. Which but scroll down to Walmart so we can create the negatives that we want. But there we are. Look at that, all-time high. Walmart is America. It's the most important retailer.
Finally, where you been, Walmart?
Woo!
Jeez, Louise.
Just not doing much. Not doing much. I have friends down there. Penner, come on, what's going on, buddy? What's going on there, fella? But it's good to see that they're finally breaking through that mark right there where the finger is. I've helpfully drawn in Mr. Walmart happy smiley guy's finger. That was January, right before the White House came out and they said they were pretty serious about these tariffs. It's always been the case that Walmart is really one of the few companies that unambiguously wins out of this. They gain either share or they just gain pricing power, and they can kind of weather whatever tariffs are. They're bigger than one president. So to see this company breaking out to a new time high or all-time high right here, right now, is interesting. It's either a super ironic top as the Fed cuts, or it's kind of poised to go much higher.
All right.
I'm in the latter camp. I'm long Walmart. I'm always long Walmart. I defy you to be a good, healthy American and not have a little bit.
I mean, as we know, all-time highs tend to get more all-time highs.
More all-time highs. I was excited. I might have been one of the few people watching that in real time today, but it ticked over 105.30. I was getting a little giddy.
I tell you what, this probably isn't bearish, Jeff. I think we can agree on that, right? Probably not bearish when the largest retailer / second largest private employer in the country, or maybe the largest private employer. I don't even know.
Second largest private employer in the entire damn world.
There we go.
They're a healthy size. They're big. They're big, as they say down south. And it's hard to come up with the whole world's collapsing and everyone's going to Walmart to commiserate about it. I'm not sure why everyone would go to Walmart.
Or is it a case of everyone is shopping down, right? They're trading down. They were shopping at Williams Sonoma, and now they're shopping at Walmart, Jeff.
Yeah, it's an interesting theory. Usually, kind of, they're definitely taking share from the middle class, but they're doing that by just becoming better. Okay. And so, if you go into a Walmart, it's a pretty nice place to shop. If only there was some person out there that would take a tour of these stores, so America could see exactly how to shop them and not what to look for. That's a teaser, by the way. But if you walk into Walmart, you can see right away why wealthier customers are finally going there.
All right, so it's not like everyone is leaving Lovesac and Williams Sonoma and they're going to Walmart.
And Restoration Hardware, it's
Restoration
whatever
Hardware.
they're
Yeah,
doing.
no. Okay,
But yeah,
got
yeah,
it.
no, it's not. That's
Got it.
not it.
All right. Against all odds, we are somehow still in a retail or consumer earnings season here. I don't know how, but we are. So you got a few on your radar for this week.
We're
This
kind of
is
starting to again. This is FedEx. Now, this
yeah.
Spencer, it's a wonky chart, and we've already done more than our fill of government data. But if you would have said 10 years ago that you would add $1 trillion on e-commerce, you would think that would somehow benefit FedEx and UPS. FedEx reports tonight, and they've gained nothing from this. This chart right here shows e-commerce as a percentage of U.S. retail sales going from like
Wow.
7% to over 15, 16, 17% as high as, and I think that's understating it. In the last 10 years, if you pull up a chart of Walmart, it hasn't done, or not Walmart, if you pull up a chart of FedEx, it hasn't done crap. And the reason is that they're kind of in a pincher move strategically where you have absolutely their Amazon eating up that entire market. They're doing the entire supply chain and they're doing all the distribution. E-commerce is about 40% of what FedEx does, and they're losing share. And so Amazon's crunching them on that side. And you have even Target today announced, I pulled up the headline because I couldn't believe it. It's a good sign for Target, but they're going to expand their same day shipping. They're going to do that from their stores. They're not going to use FedEx. And so these delivery companies are becoming less and less relevant. FedEx used to be a great economic tell. People will look at them tonight when I expect them to miss, and they'll say, oh, this is a bad sign for the economy. Not really. It's just a good sign for companies using better shipping groups.
If you had asked me what was the percentage of U.S. retail sales that were e-commerce 10 years ago, I would have said more. What does that say? 8%, whatever. I would have
Yep.
said more than 8%. I would have said it had to have been at least 15, 20, but no, it's 15% right now.
Yep.
That's
Yep. And you know what
remarkable.
else is the real shocking thing is we'll take a stab at it. How much of that do you think is online grocery? What percentage of groceries do you think are bought online in the United
One
States?
1%.
That's pretty close. It's about two or three.
Okay.
That's been a market that people have been trying to break into forever. Walmart's
Yeah.
finally figuring out. Amazon's going after it whole hog. You know who's not going to get a penny from it? FedEx. FedEx will
Yes.
not, in fact, make any money.
And isn't this the Amazon antitrust argument from Amazon's point of view, which is like, look, it's not. Yes, we are the largest e-commerce retailer, but in terms of the overall retail pie, we're not.
Yeah,
There's so
yeah.
much more. There's 85% of the retail pie out there that is not Amazon, right? So,
Right, right. And
um,
they pretend to be kind of enfeebled and all we
right,
do we're just a tiny little store. And
right,
meanwhile, they're doing 300 billion a year out of their
yeah,
third party, which is just running everyone else's supply chain.
yeah,
So that's
yeah.
totally the argument is that you don't want them to have this much power in the supply chain. I don't think the government is building a sophisticated enough case to really go after Amazon. So I'm not worried
Right.
about antitrust, but that would in fact be how you'd formulate the argument
Anyway,
against them.
bottom line, FedEx, UPS, watch out. A perpetual increase in retail sales does not necessarily translate to an increase in sales for UPS and FedEx. So,
Right on, right on.
yeah,
Not an
okay.
economic tell.
Oh boy, look at those. Oh, look at that. I think this chart says it all right there. I mean, it's. Hey, at
And
least
you can see the thesis though. 10 years ago, just you got to buy the shovels and the picks. Amazon and
yeah,
they're going to be a lot of e-commerce, but they need FedEx and UPS. Nope, don't
no,
need them at all.
no, that's crazy. All right, what about the owners of the Olive Garden, Darden Restaurants?
Darden Restaurants reporting tomorrow morning. Sit down is struggling. You can see Texas Roadhouse there. They've been turning down for the last few months. That's one of my favorite names in the group. I don't know that Olive Garden should be this much better than what Texas is doing. Excuse me, a little frog in my throat.
Yeah, maybe you should.
But they report tonight. I think Darden's going to be soft. I think we've seen a lot of the sit-down restaurant group kind of fade. They've had a terrific run. I drew the big mouth open there to symbolize eating and just the general, consumer desire there. But I would fade Darden into the number.
It
And I kind
kind
of
of
like
seems
Roadhouse
like
here.
there's a have and have not here. I know Brinker, which is Eat. I think those just made new highs. That's Chili's right there. A lot of press
Yep.
on
And
on
Chili's comps were unreal,
yeah.
unreal. But it's as a group, they're really getting kind of soft. Texas Roadhouse falling apart has been a surprise. Frankly, it's been one of my favorites in the group, and it's just not good.
So expectations for you for Darden and for Texas Roadhouse are low.
Well, I just expect Darden to catch up to kind of the downside move we've seen in most of these things. I think that they've been
Okay.
riding pretty high on the idea that meat prices have gone up so much that Olive Garden, as just the house of pasta and breadsticks, is going to be better for that. I don't think
Yeah.
so.
So Darden will catch down, Texas Roadhouse will not catch up.
And that would be my expectation. Yes.
Okay, cool. All right. Cracker Barrel. We've talked about this one more times in the last months than I have in the last 10 years, perhaps.
And ever. Who
So
talked about
yeah,
who.
probably ever. All right, let's get this out of the way here. So
It's
they
surprised
had
to see this up 20% for the last year. I mean, they've had a nice little run.
yeah. So we've moved on from the whole logo fiasco. Now we're getting down to brass tacks. We're getting down to the earnings. We're getting down to the business. How they actually doing here? You said they report when?
They report, I believe it's tomorrow morning.
Okay.
So you're going to want to be on that one. And
Okay.
or no, they report tonight. They report tonight. They report mere hours, Spencer.
All
The
right.
clock is ticking on the Cracker Barrel comeback. When you redo all your stores and then unredo them because you managed to infuriate a public that couldn't really give less of a crap about your restaurant in the first place, it's a problem. It's a huge problem. I don't think
is the bar low though? Because they're, as you say, they're down 30% since July.
down
So
30%, still up 20% for the last year, and a struggling sit down. It's going to be all about the narrative for them tonight. As you can see, it's just the logo's back. It's now just a naked guy with some moonshine. But so they're embracing their roots. They're closing the aperture of customers who shop at Cracker Barrel, but they're left with kind of a pretty fattening food, kind of greasy food, and kind of a regional appeal. It's not necessarily a great kind of way to spice up your life. One of the things we've seen from consumers, they're embracing newness, they're embracing freshness. This operating team isn't really a proven force when it comes to freshening up their look, given how much they managed to enrage the entire working public that fast and not know their customers. So yeah, we'll see how low the bar is. If they trade higher, get out. I would think that this is about as pre-signaled as the Fed rate move in terms of the quarter's performance. It's going to be weak. Sell the rallies.
Basically. So they're going to report tonight for the quarter that ended in July for them, right? Because most companies typically report 45 days,
yeah,
right?
It's going to be a while back.
So,
it's going to be a yeah. They won't have, it won't be in the numbers for the remodel.
That's what I'm saying. So there's going to be nothing reflected in tonight's numbers if you want to quantify the reputational damage from when they changed their logo. That was in mid to late August that happened. So and it all took place over the course of like a week. So if there was any adverse effects to the business, it won't show up in this report. It'll show up in the next report. So we have to wait 3 more months.
The challenge here is going to be setting out a narrative for where do we go next. We are literally putting the old fixtures back up. What happens now?
I don't know. I guess they tell us.
Probably nothing good. Probably nothing incredible.
All right. And then before we go, Jeff, I wanted to quickly tease. I know you've been working on this behind the scenes. You're going to be putting on some options trades coming up.
I make my money, Spencer, with taking longer term positions and kind of digging into them. And one of the things I like to do, and it enhances the returns quite a bit, is start levering that up a little bit when you feel like you catch a trend. One of the ways you can do it is through leaps, through different trading options. We've talked about Uber today. I was kind of punching up some of that. It looks interesting, bouncing right off its 50-day. And I want to get that idea flow out there to the folks, to the members. And so we're going to be developing a little bit. I'm not sure how much we want to share. You can talk about it. It's just going to be more content, more interaction, more trade ideas, more flow.
I'll say this. The options trades that are coming are not going to be publicly available to everyone. That
No.
makes no that makes no sense. If you want to get access to not just the upcoming options trades that Jeff will start giving to his members, but also his portfolio, what he currently holds, what he wants to add given certain prices, what he may want to remove given certain prices. That's all in the Mackie portfolio. The link to that is in the description on YouTube, right below. And you know what? I'll drop it in the chat while I'm here. Um, and then if you're thinking, well, I just want to know what Jeff is watching today. I don't know if I need all that. I just want to know what he's thinking. I just want to read more of his stuff. And you don't maybe need the trades. You do, but even if you may not think you do. Get the link to his free note. That is also in the description on YouTube. Jeff publishes what 3 to 4 times a week. Just
Yep.
your thoughts and musings on the consumer. And I imagine you'll have something probably tomorrow in light of these earnings reports we just discussed. So, bottom line is Jeff is busier than ever. The options trades are coming, and I'm sure you'll be hearing more about that from Jeff.
We're adding value, Spencer. We're kicking the crap out of the market the way it should be, the way God wants it to be. We're
That's
just
right.
fulfilling our destiny, and
It is a
going to
bull
give you more
market.
ways to do it. Going to give more information for the value.
It is a bull market for stocks. It is a bull market for Jeff. If you're not involved, get involved. Seriously. In the meantime, we'll just keep doing this video every single Wednesday because we like it and it's fun and it adds value. So, Jeff, I will see you next Wednesday. Let's all get our coffees and teas refreshed. I'll see everyone back here for in a half hour when we're all glued to the screen to see the Federal Reserve lower interest rates by
What's he going to get us? I hope he just pulls a puppy out of a box and he's like, "We're giving puppies to America." Just something out of the off the beaten path. That'd be fun.
Wouldn't that be fun? That'd be fun. All right. Thank you, Jeff. Thank you, everyone, for watching on our site, on YouTube, on Twitter. We appreciate you as always. Go make some money. All right. Adios.